And it looks like we're live. That's brilliant. All right, guys. Well, it's so good to have everyone. Welcome to Binance's live show. This is going to be really interesting because Bitcoin is in the midst of a bull run, and we've seen it shatter the previous all-time high of $20,000 that it made back in December 2017. Now, Bitcoin has actually broken through this barrier at the end of November 2020, and has actually continued to rise through December into the new year, eventually hitting the peak of $58,000 in February 2021 this year. So it's been pretty insane. And Bitcoin and crypto enthusiasts will obviously take solace in this run, but there's been a lot of questions like, what's driving this recent bull run? How far can it go? And where the gains are more substantial than they proved to be 3 years ago. So we'll get into all of that. And we've actually brought together some key industry leaders to help answer these questions and essentially just give their perspective. So let's have a look who we have. So we have Oliver to discuss fiat on-ramps and off-ramps. We have Josh to talk about the institutional involvement and Binance's ecosystem's growth. We have Kai, or Key, I hope I'm pronouncing that correctly, who will touch on-chain insights and whale movements for Bitcoin. So this one's going to be pretty interesting because on-chain analysis right now is extremely hot. It's something I'm following a lot right now. There's Bobby, who will talk about the rise of DeFi and token utilities. And we have Alexi to discuss Cambridge's 2021 research report and interesting insights learned from mining recently. So that's going to be great. But before we jump into this, we also will be giving away £500 in total in BNB to our live stream viewers. So if you want a chance to win this, then please post your questions below that you want our speakers to answer. You can put that in the live chat. And the best of the 5 questions we will answer, and each person will get $100 each in BNB. So please ensure that you do include your referral ID link to your questions so that you can get your £100 in, sorry, £100 in BNB. So we're going to jump straight in, and I do want to go to Kai first. I want to start off by talking about what were the most important moments that led up to this recent Bitcoin all-time high. So Kai, before we jump in, just give us a quick background about who you are. And I think it's Key or Kai. Please help me pronounce that.
It's Key for KI.
Key. Okay, Key from KI. Thank you, Key. I apologize. So let's jump in. Tell me what some of the key moments that led up to the recent all-time high.
So brief introduction for myself and my company. My name is Key, and CryptoQuant is a crypto data provider and also intelligence provider. We are building price-sensitive data and providing charts and alerts for all kinds of crypto investors. So for now, the critical data matrix for crypto trading is on-chain data to see whale moving, and also market data to see institutional spot inflows. We provide all those matrix and data guide for those metrics as well. So I think there are 3 kinds of whales that led to this market all-time high. So let me share my screen. Can you see the screen?
I can't. Oh, hang on. Let's have a look. Yes, we can see it. That's great.
Yeah. So basically, U.S. institutions and high net worth individuals in the United States, they're buying Bitcoins through USD, mostly in those executions are happened in Coinbase. And whenever those US institutions decided to buy Bitcoins through Coinbase OTC desk, Coinbase outflow, and there's a significant Coinbase outflow happens. So whenever those huge Coinbase outflow happens, price is likely to go up. And also, if they utilize Coinbase Prime, not Coinbase OTC desk, Coinbase Prime, they buy Bitcoins through Coinbase with huge amount of money. So when those institutional spot inflow happens, there's a huge Coinbase premium happens like this. This is BTC price when it broke 30K. And when it broke 40K, there was huge premium as well. So I think it's very important to see US Coinbase Premium Index and Coinbase outflow to check US spot inflows. and also stablecoin whales. So this is a relative amount of the BTC reserve in all exchanges divided by stablecoin reserve on all exchanges. So when this ratio goes up, it indicates the selling pressure is more higher, and when this value goes down, the buying pressure is going up. So I specifically mentioned that this MACD indicator of this ratio, it was buying signal when the price was ranging about 48K. So it went up like 58K after the signal. So yeah, I think it's about the battle between stablecoin whales and, I mean, Bitcoin OG whales and USD whales in Coinbase.
Yeah, thank you so much for that. I think, I think we've lost him for the minute. That's a shame, but that was some pretty interesting analysis. I'm always following on-chain analysis right now. I think it's, oh, there we go. We have you back. We have you back, Kai. Yeah, I was just saying thank you so much for that. I think it's really interesting to see what's going on. Josh, I want to get your perspective, especially in terms of from an institutional perspective. Also, give us a quick background about who you are.
Super, yeah. So thanks, Leah. So I'm the regional director for Binance in EMEA. My primary purpose is really to take the global business of Binance and bring it as local as possible. So what we've spent the last year doing really is connecting and building as many local teams and local presences in as many places as we can to really get in as close contact with our community as we possibly can. So that's really been the main driver. And the benefit of having done that as a team now is that we've got a really good feel and pulse on really what's going on at a local level in many places. And we've seen really in every single place that we're present, we've seen a huge demand, both at the corporate and institutional level, to either learn about crypto, understand how they can get involved, or actively get involved. And we see that in the key metrics. So we see, for example, the amount of corporate and institutional accounts almost tripling over a period of time to the point now where that as a business line is one of our primary revenue drivers. We of course have had to build out technology to accommodate that. So making sure that our exchange operates in a way that these institutions would like to see. And then that brings us to kind of all the conversations that we've been having with these corporates and institutions who are, I think, getting involved, but there's still a long way to go. You know, they're a small fraction or percentage of the bigger picture. And as soon as the narrative has started spreading around, you know, that Bitcoin is an asset that they very much should hold on their treasury balance sheet, as soon as that spreads further and further, these conversations multiply. And we spent a lot of time having those conversations that start off in an educational nature and actually end up in a business relationship. And I think what we've seen this year has been a pretty amazing kind of meeting of all these different events around Tesla buying Bitcoin, putting it on their balance sheet, MicroStrategy doing what they've doing, buying billions of dollars worth of Bitcoin, Square this week announcing that they've purchased even more Bitcoin on their balance sheet. So we're seeing really almost a de-risking of the concept of buying Bitcoin and putting it on your balance sheet, because all these pioneers are doing it first. So, you know, for all the corporate treasurers out there in public companies and in other corporates, the job of actually buying Bitcoin and holding it as a treasury reserve asset is significantly lower risk than it was a couple of months ago, because the pioneers are getting out there and doing it first. So I think all in all, we've seen in the institutional space a huge influx of users. We've seen really bullish news across the board around some really smart, savvy players entering the market and buying Bitcoin, buying crypto, planting a flag in the sand and going, hey, we are very pro crypto. We've seen Visa, we've seen MasterCard announcing that they're going to support crypto payments on their network. So really, it's a hugely bullish picture. And this, of course, contributes to the overall you know, positive movements we've seen in the crypto space over the last month or so. So I'm going to pause there because I know I'm unpacking some of the things that my co-speakers are going to be speaking about as well. But overall, it's been a really bullish start to the year.
Yeah, absolutely. I think that institutional coverage is one of the most important things. I think it's something which completely differentiates this bull run to the 2017 bull run. So, and you know, in terms of de-risking, I think, you know, you're absolutely spot on. Alexi, let's go to you. Can you give us why you think this bull run is happening? What are your thoughts?
Hi, Leia. It's a pleasure to be here with you and my co-panelists. So I'm a research coordinator at Cambridge Center for Alternative Finance, which is based in Judge Business School. I've been with the center for almost 2 years. Key research started off as, you know, empirical benchmark studies where we speak to various stakeholders involved in the space, but also institutions like central banks, regulators, and other public sector entities. We essentially collect data directly from them and then combine this with, you know, the wealth of publicly available data out there to reach our conclude our research. And over the years, we've built tools, of course, around the basis of our seminal research, such as Cambridge Bitcoin Electricity Consumption Index, and also the not yet publicly known Alternative Finance Ecosystem Atlas. So yeah, it's a pleasure to be here, and thank you for having me. With regard to the question about the all-time high, perhaps some of my co-panelists are better positioned to answer why the increase in Bitcoin demand and increased price. But I can certainly weigh in. My idea of it is, firstly, definitely people becoming more trust aware. So we've seen this wave of a loss of faith in traditional financial systems, but also in certain instances in sovereign governance itself. And if you couple that with the COVID and the pandemic and COVID pushing a wave of digitization, you have, I mean, the digitization, I think, is a massive part of the recipe, because it's brought everyone to be completely interconnected. But most importantly, I think it also comes down to regulation. And when I say regulation, touching on what Josh said, I'm not specifically talking about favorable regulation, but having any sort of regulatory clarity is very important. And that's, I believe, what's allowed the institutional wave to come in. And I'm not saying that we've reached the top of regulatory clarity, and it's an ongoing iterative process, but there's definitely more clarity now than there has been in the past, whether favorable or not. It allows stakeholders to know their limitations within the space. But yeah, at CCAF, we obviously remain neutral, regardless of what the Bitcoin price does. We still study these cryptocurrencies and digital assets and try to provide the empirical research, dashboards, tools, so that users can come and see the facts and make up their own mind.
Yeah, thank you for that, Alexi. I think you make a really important point, when you talk about the pandemic and how that's kind of pushed everybody more online, particularly, in terms of money printing and so on and so on. I think it's really given people an eye-opener. Bobby, let's go to you. For those who are just tuning in now, we're talking about the most important moments that have led to Bitcoin's all-time high.
Yeah, everyone. My name is Bobby. I'm the co-founder and COO at CoinGecko. CoinGecko is a crypto data aggregator. We track price, market cap, trading volume for over 6,000 cryptocurrencies, and been operating since 2014. I think for me, what has been some of the key moments that have led to the Bitcoin all-time high, I think market really took a turn after last year's March 2020 Black Thursday. So where the price went down to about $4,000. And it was kind of a shocker for everyone. Everybody got shocked that the price went all the way down. And then shortly after that, I think the key catalyst for last year was kind of the Bitcoin halving sometime in May or so. So that was kind of like a very bullish event, and that kind of grew up all the way. And then I think the key thing is if you look at it, was the coronavirus and the pandemic, and then governments were forced to. I mean, a lot of companies furlough workers and they're going bankrupt. Governments are forced to step in and put in stimulus. So what we are seeing is a massive amount of quantitative easing, money printing going around in the world, and this has sort of fueled expectation that inflation is going to come by. The money that you have is worth less and less. So a lot of institutions, people seeing this and buying into Bitcoin, just like what Josh and the rest have said earlier. So the big thing is, we're seeing billionaires, we're seeing large corporations putting in not just $1 million, $2 million, it's like in the billions of dollars worth of Bitcoin. So you said MicroStrategy kind of paved the way by buying $1 billion worth, and they just added on a couple of days ago another $1 billion. So they've purchased $2 billion worth of Bitcoin. I think Elon Musk was a big catalyst as well. He's obviously the richest man, second richest man maybe now, but he bought like $1 billion worth of Bitcoin for Tesla. So that's obviously a very big move as well. I guess the question now in terms of every single large CFO mind is like, do you or do you not put Bitcoin on the corporate treasury of the company? And it's the same question that every fund manager asks. Do you or do you not have a small percentage of Bitcoin exposure on your fund? Because if you don't have it, and Bitcoin does outperform a lot of all the other asset classes, then your investors, your LPs are going to ask you, what are you doing? Are you guys sleeping on the job? And so on. So that's kind of like some of the key moments that have driven and it's very Bitcoin driven, but like if you look beyond Bitcoin, there's a lot of other things that's been going around as well. There's all this DeFi growth, things that what we're essentially seeing is everything that is in the traditional finance is being replicated in a decentralized manner. Initially on Ethereum, but now being replicated across many other chains such as Binance Smart Chain and so on. I think what we're seeing is that a lot of users are coming on board, and it kind of democratizes financial services that was not available to ordinary guys, that were only previously available to only rich accredited investors, for example. So we are seeing a lot of this growth, and that's kind of one of the reasons why we're seeing some of this movement this year.
And I think you make a really interesting point just before that point about the halving, because obviously we saw that back in May, and people often sort of say, it doesn't, we don't see that price in straight away. It takes a few months for that to kind of kick in with all that institutional interest. I'm totally with you. I think that's going to have a huge impact on the market, like we've already seen. So Oliver, let's go to you. Tell us, what do you think some of the most important moments are that led up to Bitcoin's all-time high?
Hi, Leah. Thanks for that. Oliver von Landsberg-Sadie, founder and CEO of BCB Group. Our job is to provide fiat on-ramps and off-ramps for exchanges like Binance, so that more companies and more people can get involved in this very exciting growth area, right at the front of where money is evolving into a properly digital concept. I think, Key, Bobby, Alexi, Josh have touched on all of the major themes here. If we were to identify some specific moments over the last year or so, which really drove this, I mean, the halving is certainly a major event. But for me, what caught my attention was first was back in May when Paul Tudor Jones took a position, and that really raised a lot of people's eyebrows in the institutional space, because for the first time, somebody with much more of a traditional portfolio took a serious position in crypto. Roll on to August, and you got MicroStrategy's first major deployment, 250 mil. Square came in October with 50 mil. Then November, a whole string of very interesting events. December, Ruffer, huge British traditional institution, puts nearly $1 billion, or $750 million in. So all of these are adding up to what is a real massive momentum, and really kind of bringing the awareness not just to the retail market, who've seen this before back in 2017 and 18, but also to institutions who now recognize that this is a legitimate place to use as their treasury. So it's been quite a ride. I think looking at it specifically from my angle, which is the fiat on-ramp, off-ramp angle, I think if you roll back a few years, banks were a lot more hostile to this market. You'd get a lot more transactions blocked, or banks not supporting any crypto-related flow. That's relaxed a bit. Looking ahead in the next year or two, we'll see much more adoption of open banking, which will make it super easy for users to log into Binance and other exchanges and make their deposit without leaving the UI. Not having to log into their bank UI to make the payment, etc. So all of this adding up to the recent all-time high, and that's certainly not going to be the last all-time high this year. We'll see a few more of those peaks.
Very bullish. I like it. And yeah, absolutely. On ramps and off ramps, having that slick user experience is so important, especially for bringing new people on. And in terms of institutions, I think, we've just sort of seen it happen so quickly, really. You mentioned back in August, that's within 6 months, there's been an entire turnaround in sentiment. And I even want to just draw your attention to Wall Street Bets, because what went on there was absolutely fascinating. And I think it really kind of played the part and played that argument very well as to why we need these decentralized services, essentially. Let's move on. We have another topic to go to. For those who are just tuning in now, we're talking Bitcoin. You actually have the opportunity to win £500 in BNB. Just submit a question, and we will pick 5 questions. Each person gets £100 worth of BNB. So that'll be the last 10 minutes of the show. So our next topic is pretty interesting. We've touched on this, but what would you say some of the key differences are between this bull market and the bull market that we saw back in 2017? So Kai, will come to you first, kick this off. And also, guys, feel free to jump in. I want to keep this really chatty. So if anybody feels, you want to add something there, then please go for it. This does not need to be formal. We'll keep this really fun. Kai, you're on mute.
Yeah. Can you see the screen?
Not yet. Yes, we can now.
Okay, so basically the key differences between 2017 bull run and bull run since last year is one thing is all exchanges reserve Bitcoin holdings in all exchanges. So it started to decrease since the March last year, and it always has been increased since 2013. So this huge sell-side liquidity crisis had happened from U.S. institutions buying. For example, this is daily Coinbase outflow chart. So whenever this significant Coinbase outflow happens, the price is likely to be a bottom. So it keeps in, those significant outflows happens. And the next thing is all exchanges net flow. So net flow is basically inflow minus outflow, the differences between those inflows and outflows. So in the bearish market, the net flow is likely to keep positive like this. And this is BTC price when it hits the all-time high in 2017. And this chart is 2020 when the bull market was beginning. The price was ranging 10K. So the net flow kept negative for a long time, and even the net flow was the lowest since 2015. So those huge outflows mostly come from Coinbase, which indicates U.S. institutions buying Bitcoins through Coinbase OTC desks.
Thank you so much for that. I think watching the outflow, as you put it, on exchanges has been a pretty interesting one. I know there's a lot of different, following the on-chain analysis, and I think that's something which has really just struck me about this current bull market. So thank you for that. Let's go to Josh. Give us your thoughts. What are the main differences between the two bull runs that we've had?
Yeah, so I'm going to start off with retail. Our retail business, we've seen kind of growing from strength to strength, and we keep a keen eye on user registrations. So how many users are coming in the door, how many of those users are, for example, trading and staying with us for a period of time. In 2017, we tended to see new users come in, maybe do one piece of activity and then not do anything else. The pattern of user behavior this time is quite different. So we have record users coming in, record users doing a first trade, but actually using fiat functionality for the first time. So in 2017, most users were quite limited with what they can do. So they could buy Bitcoin with a credit card, maybe. A very small amount of the large exchanges had a slick on and off ramp. So that wasn't really available to them back in 2017. So now people can put much larger amounts on, and of course withdraw larger amounts as well. So they're really able to have a pretty seamless, slick experience, which they weren't able to in 2017. So the stickiness that we've seen in terms of our retail products has been very, very different to 2017. So we see that there's a clear shift in sentiment to a much more long-term user as opposed to a short-term quick buy of Bitcoin and a quick flip, sell it quickly and crystallize the gains and move on. That's not how users are behaving this time around. So we see that as very positive, and it's a great foundation to build on for wider adoption and wider use later this year. On the institutional side, we very much see an inflow, a large inflow of institutional users, and that's very different to 2017. The conversations that most crypto exchanges were having in 2017 with corporates and institutions were very nascent, very, very early. It was more explaining the technology, explaining how custody works, explaining how you hold your Bitcoin, and maybe some hedge funds in that space were putting significant amounts of money in, but no real corporates, no real institutions that had fiduciary obligations. They're managing other people's money. Simply wasn't happening in 2017. Now that's completely different. Now in 2021, we're seeing, fiduciaries entering the market, so people managing other people's money, asset managers. We've got people like Grayscale in the space that have been really, distributing large amounts of Bitcoin exposure to, high net worths and institutions in the US. We've got all these other institutions that have just entered the space in late 2020. So really the fundamentals are completely different this time around. I'm not saying that that's going to completely erode volatility. I think volatility is really a key feature within the Bitcoin market. It makes it attractive to some, and it's a negative for others. But that's not going anywhere. So the fundamentals, in our view, are significantly stronger this time around.
Yeah, and I think you make a really interesting point in terms of on the retail side of things, because things are complicated in this space. Things are difficult. It's just, in the inherent kind of nature of technology in this day and age right now. And, kind of making that user experience a lot easier is really going to help onboard new people. And I think you're right in terms of that sentiment has changed. People kind of see Bitcoin as this long-term store of value as opposed to the quick flip, as you put it. So thank you for that, Josh. That was great. Alexi, let's come to you. What are the differences between 2017 and this beautiful 2021 bull run that we're having?
Thanks, Leia. Firstly, it's really good to get Key's on-chain analytics, confirming my general observations as well as Josh's insights. Well, I think if we have to zoom out a little to discuss past and present, I mean, much of what Josh mentioned is exactly what I observed too. So 2017 was, entirely retail-led. It was a time based on speculation, quick profits, flipping one ICO for another. And the funny thing is, I remember that people, like old school friends that you've never heard of, would be justifying investments based on due diligence. And the due diligence was to confirm that a token had utility. And the utility wasn't so that the investor could ever use the token's utility, but just to speculate that it had utility that others would use. And then you fast forward to 2021, and it's largely institutional led. And it's also a time, of healthy competition and interoperability. But I think it's one of great innovation where we've seen things like, DeFi and Lightning Network has made progress, and BSC chain has made huge strides, and layer 2 solutions. So yes, I mean, there's significant differences between 2017 and 2021. And I think that the reason why we choose to compare these two bull markets and not previous ones is because these are probably the two when it involved more than just Bitcoin. So there's also a similarity in that.
Yeah, it's been a really interesting last year, particularly, with the DeFi summer that we've had. So absolutely, there's more going on now. It's not just Bitcoin. You're absolutely right. Bobby, let's come to you.
Yeah, I think there's a few key differences between the 2017 bull run and the current one that we are seeing right now. I think the big one, I think that Alexi said, was back, the previous cycle was very retail driven. We don't see institution playing a role in it. But at this point in time, it's very institutional driven, actually very US driven, I should add as well. I think the previous one was very Asia, pretty spread out across the world. But the current one, if you see the people that are buying a lot of Bitcoin, it's the institutions in the US. We haven't really hear about large institutions, large corporations, large banks, large companies from Asia buying Bitcoin yet. So I don't know when that will take place. Maybe they're just lagging behind a few months, but if it does take place, then that may be the dynamic, that may be the legs that Bitcoin need to move up to the next level in a few months from now on. But at this point in time, it's a very US-centric thing, and you can kind of observe like Asia's retail traders are always dumping during the day in Asia, and then when the nighttime comes, the Americans will start buying up using the time-weighted average price on Coinbase, for example. I think the other big difference is that I think in 2017 there was no people, there's no government, no regulators who say, or no one that are of high profile that goes out and say that, hey, I'm buying Bitcoin. Whereas the narrative in the media back then was very, Bitcoin is used for drug, it's used for Silk Road, it was those things from the 2014, it's all used for illegal purposes. Whereas these days you have Elon Musk going out saying that Bitcoin is good, Dogecoin is good, Dogecoin is going to be the coin for Mars, for example. So people start to think that it's not just Bitcoin, but there's Dogecoin and there's all the other coins as well. So people got curious. If Elon Musk is saying something, then it must mean something, right? So people start getting curious. And then, like Josh said, like the on-ramp thing has, the on-ramp infrastructure has definitely improved. I think in 2017, it was really hard. It's still relatively hard to buy Bitcoin with credit card. Not most exchanges don't support credit card purchases, but these days almost all exchanges have Simple X integration to have credit card transactions. I think the big difference as well between then and now is Alexi was saying that a lot of them back then was just flipping ICO with no utility at all, whereas this time around altcoins, especially DeFi coins, have actual utility. There are people using them, real users, real use cases, and they are cash flow attributed, flowing to the protocol and flowing to the token holders. So you can see that DeFi protocols like Sushi, Compound, Aave, they are driving trading fees, borrowing fees, they are all attributed to token holders. So that's kind of the big difference, and it's kind of driving up the price for all these DeFi tokens.
Yeah, I also really like the distinction you made between US versus Asia in terms of the US driving this particular bull market, because it's not something which I think has occurred to a lot of people, because we live in such a decentralized world that we all sort of think we're all one of the same, I guess. But absolutely, that narrative has totally changed in terms of, having that. I think often in the media, they present Bitcoin as the man in the hood, and it's also dark and mysterious and evil. But having people like Elon Musk absolutely gives it kind of that validity, I guess. So Oliver, let's come to you. Give us your thoughts. What are the differences?
I think I'm going to pick up where Bobby was chatting about DeFi, and I think that's what that's opened up in this bull run is an opportunity where people can earn a decent yield on their position, on their cash or their crypto position. This simply wasn't available a few years ago, and it's certainly not available at banks now. There's no saving account in most of the world that can get you more than 1% a year on that position. But of course, DeFi opens that opportunity, whether you're staking a stable coin like USDC or Bitcoin outright or Ethereum. But I think one of the interesting things is, back in 2017, a lot of it was driven by crypto to crypto exchanges. That was, a ton of the volume was on a crypto to crypto basis. Of course, one of the main gateways at the time was USDT, which of course had its own limited on-ramps. Now, of course, there's a massive, the gateways to get in are much bigger, and the friction to getting in is much lower. So this has resulted in a situation where we have much deeper liquidity on all exchanges. If you traded $1 million in 2017, it would absolutely move the price up or down by a material amount, and you'd have to carefully nudge that order in on an algorithmic basis or on a careful stepped ladder basis. Now an exchange will easily swallow that amount. So this has meant that hedge funds trade in large units. $1 million is a small ticket, and relative to a multi-billion-dollar hedge fund. So they need that depth of liquidity to meaningfully trade. But now that institution players are much more involved, of course, the frequency of those larger trades is also higher. So the volatility stays the same, which I think Josh pointed out to is still here to stay. I think the only other difference here is that people are also starting to wake up to non-fungible tokens, NFTs, which are drawing, that early adopter, that innovator crowd again. There's a few fundamental differences in terms of what products are available, how much depth there is, how many gateways there are to actually get money in and out.
Yeah, thank you for that. Firstly, thanks so much for bringing up NFTs, because I'm absolutely fascinated by seeing how that is going mainstream. That's blowing my mind. Just given because it's blockchain technology and it's going mainstream, and it kind of happened out of nowhere. I figured it would be something which would stay within the community, like DeFi went big in our community. But seeing NFTs go wild has just been mind blowing. I mean, you have the likes of Gary Vee talking about it, and I think that is just, I'm just going to watch how that one's going to play out, because that's fascinating. But for everybody just tuning in now, don't forget that we are giving away £500 in BNB. Just submit your questions. We'll take 5 questions. Each person gets £100 in BNB, and that'll be at the last 10 minutes of the show. So just moving on to our last segment. I will come to Josh first, because Kai has just popped out for the minute. So I want to talk about what is the crypto market's outlook for new people getting into the space. Many new people are coming in, especially as Bitcoin is constantly breaking new highs almost every single day. So Josh, tell me, how does that look?
Yeah, I think the most common question we get asked is it too late? Am I coming to the party too late? I'm buying at the top. I'm going to be the person that gets dumped on. And, this is a common narrative throughout the entire history of crypto, right? You always feel like you're coming in last when you're making that first step, right? So that's the most common question. Am I too late? And we certainly don't give investment advice, but what we do say to our community is, it's never too late to get involved. And it may feel like we're at the top now, but there's certainly a long way to go. And what we're seeing is the fundamentals are so strong that, if you're getting involved, this is very much still a beginning of sorts. Now, in terms of a retail user getting involved today versus last year or the year before, what they're seeing on crypto exchanges, Binance included, is a much better user experience. It's much easier to navigate their way around the platform, to fund their account, make a cash deposit and a cash withdrawal, pay with their credit card, simple things like that. They want to be able to use a platform in an intuitive way that kind of feels, and dare I say it, feels a little bit like their banking platform, because that's what they're used to. So they want it to kind of look and feel like that. They want to understand what they're doing when they click certain buttons. They don't want to have to think too carefully about, connecting up their decentralized wallet and MetaMask to an exchange. You're just going to make these things extremely easy for them. So they're really getting that right now from us at Binance and from other crypto exchanges as well. UI, UX is far superior to where it was previously. So retail users have got the opportunity to come in, start learning, start playing with different products and services. And the plethora of things that are available to them now, whether it's DeFi, or whether it's all these different kind of user journeys that are coming out in either derivatives or yield generating products, there's so much for them to get involved in. So in terms of the breadth of services available to them now, the sky's the limit. If you want to earn interest on your assets, you can buy crypto and just hold it, earn passive interest on it. If you want to actively trade the market, you can do so. You've got all of the sophisticated charting tools available on crypto exchanges that you would have on a traditional exchange. So, really there is something for everybody now in the crypto space. So I think our key message is it's never too late to get involved.
Yeah, I think people are often asking me, is it too late? Have I missed the boat? And I think it kind of depends on, what your goal is. Are you looking to make a quick flip, or are you looking to use Bitcoin as that store of value? And I think a lot of people forget that you don't have to buy a whole Bitcoin, and that education is just going to be so important in terms of getting more people in. So thank you for that, Josh. Kai, we have you back. So if you missed it, we're talking essentially, what does the crypto market look for newcomers? How does the new outlook look as new people join in?
So I basically totally agree on Josh's opinion, because I think U.S. institutions started to understand the digital gold narrative to hedge financial crisis. So can you see the screen?
I cannot yet. Oh, yeah, here we go. It's all good. I can see it.
Yep. So basically, only fund flow ratio is the ratio of tokens for exchange deposits and withdrawals. So about 2.6 million Bitcoins moved every each day, and only 3% of tokens were used by exchange withdrawals and deposits, which means 97% of transactions were P2P transactions, which might indicate OTC deals. So I specifically tweeted about this in September last year, and then Michael Saylor, Warren River, other US institutions announced their OTC deals. And this is the latest data. Fund flow ratio kept very, very low, and tokens transferred kept very high, like 2.1 million Bitcoins. So still a lot of US institutions buying Bitcoins. And what's interesting is that about 13 hours ago, there was huge Coinbase outflow happened, about 13K Bitcoins. So those Bitcoins went to Coinbase OTC custody wallets like this, multiple Coinbase OTC wallets. So it indicates US institutions, they were still buying prices. The Bitcoin price was ranging about 48K. So it's not too late to buy Bitcoins, I think.
Absolutely, I'm with you. It's never too late to buy some Bitcoins. Thank you for that. I always find on-chain analysis, honestly, just so fascinating. It's kind of just getting that info right from the source. So Alexei, we will come to you. Give us your outlook and what is your opinion on how this is going?
Thanks, Leah. Key, I don't know if I mentioned to you before, but I'm actually a subscriber of CryptoQuant. I find it extremely insightful tool to have at your disposal.
Okay.
So yeah, leading off that, I previously categorized, this market as one of innovation. It still feels like there are higher barriers to entry. And just touching on, what Josh also briefly discussed. I mean, the intrinsic nature of blockchain is supposed to be for the people, but as a newcomer, you're still faced with a very steep learning curve. I mean, think about it. You can be a specialist in any other field, and nothing changes really from a day-to-day basis. But with blockchain, being a bleeding edge technology, there's a very high demand for ongoing learning. And so, I think we agree that the end goal, beyond hodling, of course, is to have these technologies intertwined with our daily lives, as Josh said, seamlessly and unnoticeably, and eventually reach a final objective or end game where there's financial inclusion, financial widening, and this form of truly democratic collaborative capitalism. And we certainly see that in the wider fintech area with the applications. And ultimately, the base layer for that is, again, regulatory clarity and ongoing global discussions. But we're on a trajectory, for sure, toward this, financial progress and financial freedom. And yeah, I'm certainly excited for what the future holds.
Yeah, likewise. I think, again, picking up on that point about barrier to entry is just so important. I've tried to onboard my family into the space, and it's still kind of tricky, especially just sort of understanding what everything means, So absolutely, I think that's a really important point that we really need to the space in general needs to focus on. Bobby, let's come to you. Can you give us your thoughts, please?
Yeah, I guess the question that Josh mentioned, that a lot of people wonder, is it too late to buy Bitcoin? I guess a lot of people also think, how can I ever afford to buy one Bitcoin? And I guess the question is, there is a lot of institutions buying. I guess the question that everyone should ask itself, is Elon Musk is Tesla the last company that will announce that they've bought Bitcoin this year? I highly doubt that will be the case. So a lot of companies, they are actively purchasing Bitcoin. They just haven't announced it yet because they will only announce once they've acquired 500,000, half a billion, 1 billion, 2 billion. I don't know how much, but they only announce once they've completed their purchase. So what we are seeing is that there will be more catalysts coming on this year where larger companies will start buying. I guess the big question is when will the FANG companies come in? The Facebook, Amazon, Google, Netflix, Apple, will they come and buy Bitcoin, or will they put a play onto the blockchain space, and how? I think Facebook has already announced that they are going down the stablecoin route through the Libre. I think it's renamed DM now, I think. But like, we're seeing central bank digital currencies coming on board. It's already live in a few cities in China. Other countries are also thinking of implementing the central bank digital currencies. What's going to happen when that comes on board? That will probably make it easier to onboard onto Bitcoin as well. I guess once this whole round of institutions coming on board, I guess the next question is, who's going to buy next? I mean, are governments thinking of buying Bitcoin? I mean, if they're thinking of building their own central bank digital currency, will they be thinking about backing their currency, which used to be backed by a lot of gold? Will they start thinking of backing it with Bitcoin, for example? I mean, and this is not new, right? I mean, we start seeing the mayor of Miami, Francis Suarez, talking about putting Bitcoin on Miami's balance sheet. So if he is thinking like that, like, there may be other politicians thinking the same as well. And especially for a smaller country which does not really have a strong currency, by a strong fiat currency itself, there's a lot of opportunities to kind of leapfrog the system and kind of use Bitcoin to rebuild their entire currency system. So we don't know yet, but I mean, maybe this cycle, maybe next cycle, we don't know. But I guess the question is the store value. This narrative, this digital gold narrative is very strong. So I think for a lot of people, it is a very steep learning curve. Learning about Bitcoin itself learning about money itself is complex. And then when you start throwing in Bitcoin, that becomes complex. And then you start throwing blockchain technology and the thousands of other tokens in existence, then for most people, that's just too much and they just give up. So I think for the advice that I would just say is that, I mean, just get a small amount of Bitcoin, dollar cost average your entry in, always start somewhere, because no one starts with $1 billion on day one. Everybody starts somewhere and start going out. And I think, especially during this time, this market cycle, when there's a bullish cycle, there's a lot of false gurus, a lot of scammers, a lot of fake influencers trying out to push you scammy products, fake products that try to take your money away from you with the promise of investing it in Bitcoin with some higher return in some kind of fancy strategies. Stay away from these guys. Just go and get it, spot Bitcoin and store it properly, learn all these basics and get them right. So yeah, that's what I would say.
Yeah, Bobby, thank you so much for bringing up scammers. I think that's so important. You know, we're talking about the future of this space and bringing new people in. I think that's essential. There will be people that will DM you and message you saying, give me some Bitcoin and I will give you back double. Nobody's giving you free Bitcoin. Never forget that. And guys, always make sure that the person messaging you is who they say they are. There's often a lot of fake accounts out there. So it's pretty insane. But really interesting points you make, Bobby, especially in terms of CBDCs and how that's going to sort of play out against the people's money, Bitcoin, and whether there will be that kind of tug of war between power, or whether, we'll start to see some warmer approaches like we've seen from Miami, the mayor of Miami. So that's really interesting. So Oliver, let's come to you. How do you see this moving forward?
Again, so many great points mentioned by all these guys here, and I especially love Key's charts. They're epic. So I guess picking up on the last thing Bobby said, which is on that kind of hackers and scammers thread, if it sounds too good to be true, it probably is not true. So you've already mentioned that, one of the most popular examples is send me 1 Bitcoin and we'll send you 10 back. And there's an awful lot of phishing scams out there, major wallet providers, scammers impersonating them and convincing people to download dodgy versions of those wallets, and then of course clearing them out. So it's a bit of a minefield, and that's not going to change. It's always going to be an arms race between the sophistication of tools preventing scams and the sophistication of scammers out there. And I'm going to save the rest of that response to one of the community questions because it's bang on for that topic. But I think in general, if you're just starting out, going back to what what a number of people said, including yourself, Leah, and Josh and Alexi alluded to, it's not too late. It's like watching the Ford Model T roll off the production line and going, oh damn, I've really missed the automotive market. Or there's a gazillion analogies. 1990s, oh damn, I've missed the internet boom. I truly believe we're just at the foot of the mountain, and I think the biggest signal of that is what money do you pay for a coffee at the coffee shop? If as soon as we're allowed to go to one, it's it's dollars or it's USD or it's or GBP or euro. It's not crypto yet. So for as long as it's not crypto yet, that's the size of the opportunity ahead of us, I think. Anyway, I'm going to leave some time for questions.
Yeah, it's a really good point, actually. As long as it's not crypto yet, then the opportunity is absolutely still there. You are nowhere near too late. And I can't remember who mentioned it earlier, but maybe it was Josh. You were talking about MasterCard. So what MasterCard are doing is really exciting. And I think that's going to be mainly stablecoin focused from what I've read, but we're not sure yet. But as promised, it is time for our community questions. So guys, thank you so much to everybody that submitted questions. We've got some great ones coming through. Our first question is to Josh, and it's actually from a user with the name One Echt. I hope I'm pronouncing that correctly. It sounds German. So firstly, congratulations to One Echt. You have just won £100 in BNB. So Josh, the question for you is, where do you see BNB and the Binance ecosystem in 5 or 10 years' time?
Wow. Okay. So 5 or 10 years time. I mean, Binance, in context, celebrated its third birthday last July, right? So we're not even 4 years old yet. So 5 years seems like a very long time for us. But I will hazard a few very high level guesses, perhaps. And just to set the scene, this year we saw BNB go from $20, $30 to an all-time high of, I think it was around $333. And so that kind of parabolic price movement, I think, has been sparked by a few things. But at a very high level, it's been sparked by people realizing that the growth of Binance Smart Chain has been huge. And Binance Smart Chain has grown a pretty active and robust community around it that are building all kinds of cool things on top of it, whether it's PancakeSwap and all these other DeFi tools that are being built. So Binance Smart Chain is very much a catalyst for growth for Binance. As much as we can build in a decentralized manner, we're going to try and do that. CZ has said for a long time that he wants Binance to decentralize itself. Now, what that actually means in the long run, we don't know yet. Will it be possible to decentralize as much of our business as we want to? Can we decentralize decision-making? Can we decentralize strategy? It's yet to be seen, but we're certainly going to try and decentralize as much of our business as we can. And Binance Smart Chain for us is the key foundation for that. And we're going to build as many cool things as we possibly can on top of Binance Smart Chain. And that's going to be really one of our core focuses for the next year or so. I don't know where we'll be in 5 years' time, but I hope we'll be a key infrastructure provider in the space. We'll be spreading the freedom of money in as many places as we possibly can, making it as easy and cheap as possible to get involved in the crypto ecosystem. And I think in 5 years' time, we're going to be looking back on this as the very beginning of the crypto bull run, and we'll be in a very different place.
Yeah, thanks for that. I think it's a really interesting point that you make as well about decentralizing yourself, because I was talking yesterday to my community, and I was sort of comparing Binance Smart Chain to ETH, and I think there was a sort of push and a want for something more decentralized. So that's really cool to hear that you guys are focusing on that. Our next question, forgive me if I'm pronouncing this wrong. It's from, I'm gonna give it a go, Kashonya. I'm gonna spell that for you so you guys know if you've won. It's CUXONJA. So well done, you've just won £100 in BNB. So that's actually directed to Kai. The question is, how much more do you think the market can push to the upside before the bull market cycle ends?
So, like I said before, this bull run is mostly come from US institutions. So basically they understand the digital gold narrative, and I think it's about how much portion that Bitcoin can take from gold market cap. So this is realized market cap. It differs from normal market cap because there are lots of lost Bitcoins and unreachable Bitcoins. So this market cap is calculated by the stored value of Bitcoins by summing up each Bitcoins at the price when it was last moved. So the realized cap is about $300 billion, and the latest gold market cap is, as I know, 11.4 trillion market cap. So only 2.6% of market cap, gold market cap, is Bitcoin realized market cap. So I would say if those Bitcoin can, lots of institutions accept Bitcoin as a digital gold, and the market cap ratio is skyrocketed like about 5%. I think the price is likely to go up till 100K for now. So it's all about supply and demand. So you should look at on-chain data to see the Bitcoin reserve and stablecoin reserve, which indicates buying and selling power.
I love it. Bullish as always. Thank you, Kai. Our third question is from RK, which is directed to Oliver. So the question is, what are BCB's plans to help improve the fiat on and off-ramp experience for newcomers? And is your drink BCB branded as it matches your background?
Great questions. I'll try to keep it as quick as I can looking at the clock. So firstly, what does a user care about with a fiat on-ramp? It isn't just one thing. Where is my money? I've sent you £100. Why is it not showing on the screen? I've withdrawn £100. Why is it not in my bank account? And to help people understand why this is a problem and what BCB are doing about it, is that when 100 people sign up, 99 of them will have good intentions, but that one individual who doesn't spoils it for everybody else. They mean that we have to have very sophisticated transaction monitoring tools. We have to have very tight onboarding criteria to really understand the clients and the source of funds. And that's not an easy game when it scales to hundreds of thousands or millions of users. So the answer to the question is, we are investing a lot of money and time and resource into making that question, where is my money, giving it an answer as quickly as we can by really focusing on the smartest transaction monitoring and the cleanest and the quickest user experience. And the question about my can is, it's actually a can of Sprite, but the green matches the green screen of my
look at that.
my background. So it's just good old Sprite, that's all.
That's funny. Yeah, great points there. People already have a lot of hesitation towards this market. There's already still a lot of negative connotations. So absolutely, they want to know where their £100 is. They want to know that everything is safe and everything is okay. So great points there. Thank you, Oliver. Our fourth question is a pretty brilliant one, actually. I really like it. This is directed to Bobby. So this is from Danwick12. So congrats, Danwick12. You've won £100 in BNB. So the question is, will the huge rise in altcoins continue chipping away at Bitcoin's market dominance, or will Bitcoin actually maintain its position as the market leader in the years to come?
Yeah, it's an interesting question, right, on Bitcoin versus the rest of the other cryptocurrency altcoins and all, right? So if you look at in January 2018 or so, when the previous high, Bitcoin had the dominance of only 36%. So historically, Bitcoin always maintained a dominance of roughly 90% with respect to all the other cryptocurrencies, 90+%, and every other thing. And as 2017 came by, like its dominance has chipped off and went up to its lowest point of 36%, 35%. And then this kind of, as the bear market came by in 2018, 2019, we started seeing that Bitcoin came back with its stronger dominance. At its peak, it went back up to around 70%. This has two things, right? Which shows that Bitcoin used to have over 95% of dominance, but now during a bear market, it went up to around 70%. Bitcoin has always been the reserve currency of crypto. And I expect Bitcoin to be the reserve currency for many more years to come. It has this digital gold narrative. It is one of those coins that has a finite supply of 21 million, and you can't really compare. The second coin is Ethereum, and he has an infinite supply at this point in time. So for Ether to serve as a digital, Ethereum can't serve as a digital gold narrative simply because its supply is infinite, and the monetary supply kind of changes as it goes along. Bitcoin has been set in 21 million, and anybody who tries to mess around with that will kind of form its own fork and kind of be by itself. So I think to a large extent, the dominance has this cycle has been kind of up and down, really depending on the price of Bitcoin. I think the momentum this cycle has been very Bitcoin driven. So when Bitcoin moves up a lot, driven by the institutions in the US, dominance for Bitcoin will go up. And then when it starts ranging again, I guess people money tend to flow to altcoins, and then we kind of see that cycle. Kind of see this pattern repeating itself, ranging between the lowest. But I think in this current cycle, I think Bitcoin dominance is somewhere around 60%. If you're asking me if there's more opportunity in this short term for altcoins to outperform Bitcoin, I would say yes, there is quite a likely opportunity. But again, like institutions may surprise us and the money may flow back to Bitcoin again. So it's very hard to say. But in the long run, I expect Bitcoin to kind of be the largest in terms of dominance.
Yeah, I think we all sort of feel that way, especially when we look at the fundamentals. Bitcoin is just different in that sense, So I'm with you, Bobby. Thank you for that answer. Just finally, we have our last question. So the last question is actually from Elliot Connolly, which is directed to Alexi. So the question is, you launched the Bitcoin Electricity Consumption Index last year. What was the rationale behind this project, and what were you hoping to understand?
Yes, thank you for the question. Was it Elliot?
Elliot, yes, Elliot Connolly.
Yeah, really interesting topic. We launched the Cambridge Bitcoin Electricity Consumption Index in July 2019. And for those not familiar with the index, you can find it at cbeci.org. The thing is that it's really difficult to quantify Bitcoin's electricity consumption. And across various methodologies, it's largely like a simplification where it's based partly on some educated assumptions. And obviously that's an iterative process whereby we aim to add pools on an ongoing basis and mine more accurate data. But what I find of interest isn't so much the quantifying Bitcoin, but rather providing a basis to reason it. And the reason I say that is because you go to the CBECI website and you see 120 annualized terawatt hours, for example, and that means very little to most people. But on our platform, our dashboard provides, these comparative benchmarks so that users are actually able to relate and compare and understand what this 120 annualized terawatt hours actually means. And the way people actually reason is by asking whether the electricity consumed by Bitcoin is worth the utility that it provides. And then we see that there are really two diametrically opposed viewpoints, both quite extreme in my opinion, where you see certain articles, pushing the agenda that we're boiling the oceans or melting the polar ice caps, whereas others will look deeper into the utility of Bitcoin as being this unique, decentralized, global, inclusive, trustless network. But they too tend to overlook any environmental footprint whatsoever. So by maintaining this neutral, independent perspective, it must be said that this is a significant conversation to be had. And the higher Bitcoin price goes, the higher we expect the hash rate to follow. But I mean, Bitcoin uses exactly the amount of power that it requires to provide the underlying utility and security that it does. So how much security is necessary for, a market cap that's about $1 trillion and daily transaction volumes worth billions? I think that's up to the individual users to decide based on their own ideologies.
Absolutely. Alexi, thank you so much for that. We have come to the end of the show. So I want to thank Bobby, Alexi, Oliver, Josh, and Kai so much. It's been such a pleasure having you all on and hearing your expert opinion on everything. I also really want to thank the audience for tuning in. It's been brilliant. And thank you so much for those questions. They're really, really excellent questions. So that is all from us here. Thank you so much for watching. And don't forget to follow Binance across all socials. We'll see you next time.